A very good morning to all of you and welcome to my session today. Let's crack CA exams with us. Welcome to Unacademy, India's largest online learning platform, providing various courses, contents, resources for your needs and various examinations. Crack CA with us is a vertical for chartered accountancy preparation, that is your CA foundation, CA intermediate and CA final examinations that has been started by Unacademy to help you in your preparations for this. So, let's crack CA exams with us. A little about the speaker today, the educator. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I'm also an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Company Secretaries of India, and an associate member of the Institute of Cost Accountants of India. I'm also a law graduate from Karnataka State Law University, and I'm currently a practicing chartered accountant and also a visiting faculty for CA students and an educator for CA students offline and online. Prior to starting my own practice, I worked with SR Bartley Bow & Associates, that is an Indian member firm of Ernst & Young Global in the Audit and Assurance Department, and Ernst & Young India in the Mergers and Acquisition Department. I have also worked with the Manipal Group and was the corporate controller of the German subsidiary located in Frankfurt, Germany. So I welcome you all to my session today. Unacademy also provides various platforms. It also has a Plus platform subscription model which provides you unlimited access and it opens your gateway to the world of various courses, resources and contents that Unacademy has to offer you, be it the toughest of examination, be it the toughest of subjects, or be it any topic or subject of your interest. Unacademy has all covered. And by subscribing to the Unacademy platform, you get unlimited access. You get unlimited access to all the resources that it has to offer. So if you subscribe to the Plus program of Unacademy, what do you get? You get daily live classes. You get daily live classes in which you get to chat with your educator, engage in discussions, ask your doubt, and ask and answer polls all while the classes are going on. Yes, you heard it right. All while the classes are going on. You do not need to fix up an appointment. You do not need to fix up another date where you need to ask your questions. You can do that right there and then when the classes are going on. The platform provides you live tests and quizzes. These quizzes and tests help you evaluate your preparation with our regular mock tests and quizzes and get detailed analysis on your performance. So what happens with this? You get to know your weaknesses and your strengths so that you can work on them and improve on them. And you can spend more time on your weakness and maybe spend lesser time on your strengths and compensate that time on your weakness. The platform provides you structured courses. All the courses provided are structured and in line with the exam syllabus to help you best prepare for it. And to the maximum extent possible, these courses help you in your step-by-step preparation so that maximum care is taken that no important topic or subject is missed out. Okay, and lastly and most importantly, you get unlimited access. One subscription gets you access to all the live and recorded courses to watch from at the comfort of any of your devices. Like I said, the whole subscription model opens your gateway to the various courses, resources and content that Unacademy has to offer you. And that includes both the live classes as well as the recorded classes in the archives. You can choose the topic of your interest. You can choose the educator you like to listen to. And the most importantly, at the convenience of your timing. You can do it at any time. You can carry your mobile around. And whenever you get a little bit of time, you can access this resources and make the most of it. So I hope you will take this opportunity to become a part of the Unacademy platform and make the most of this. For those of you who have not downloaded the Unacademy Learning App yet, I request you to go to your app store and download the Unacademy Learning App. It's quite simple to register there. You just need to download it from your Play Store, enter your mobile number, you get an OTP and you register there. That's it. It's as simple as that. So for the people who have not done it yet, I request you to go to the App Store and do it immediately. For the people who've done it already, thank you so much and I look forward to your continued support. Like I told you a little earlier, that the Unacademy provides you subscription-based models as well. I am part of the CA Foundation and Intermediate subscription, and as part of the CA Foundation and Intermediate subscription, Unacademy provides you packages for 1 month, 3 months, 6 months, 12 months, and 24 months. The cost of a 1 month package is rupees 3150. The cost of 3 months package is 7875. 6 months is rupees 12,600. 12 months is 15,750. 24 months is 18,900. And so please go ahead and make your choice as to what is the validity or duration of the package you want and make your subscription. My personal recommendation would be to choose a package for 12 months and 24 months for two reasons. Firstly, they are cost effective, and secondly, for any major examination or any tough examination, you require that kind of preparation, a preparation for maybe 12 months and 24 months, and then to ensure that you're fully prepared for the exams. So keeping these two reasons in mind, I recommend the 12-month and the 24-month package, but still you can go ahead and take the package of your choice. But while you make your subscription and choose the package of your choice, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed subscription price. I repeat, Prathik, to get a discount of 10% on the listed subscription price. So once again, I look forward to all of you being active participants on the Plus program, and I hope to see you there soon. All right, let's come up with today's session. What are we going to talk about today? Today's course is intended mainly for the CA intermediate students who have taxation as their subject. I think it's paper 4, who have taxation, which contains your direct taxes and your indirect taxes. So let's quickly touch upon what do you mean by direct taxes, what do you mean by indirect taxes, and then move on. Now there are two types of taxes in India. First one being direct tax, the second one being indirect tax. Now direct taxes are something that the incident or the liability to pay the tax arises on the person who is earning the income or who is providing the service or product or service. For example, if I am a service provider and I provide service to you, in that case, whatever you pay me for that service as my income or my fee, on that amount I pay taxes. That is called income tax or direct tax. Now you might ask me, okay, what do you mean by indirect taxes? Now indirect taxes are those taxes, the liability to pay the taxes is on the person who receives the product or service. Let's take the earlier example again, where I am the service provider and I provide service to you. So let's say I provide consultancy services to you for 10,000 rupees. So when I bill you 10,000 rupees, I charge you over and above 10,000 rupees, I charge you something called as GST, which is currently in force at 18%. So I charge you 11,800 as my fee. So in this case, who has borne the tax? You have paid me 10,000, which is my personal income. So on that, I will pay my income tax. But on that 1,800 that you have paid me additionally, I have just collected it from you and I have paid it to the government. So indirectly, I have paid it on your behalf. But who has actually borne the tax? It is you who's actually borne the tax, as you have paid me 1,800 on top of my 10,000 fees. So that is your indirect taxes. I hope we are clear. Anyone has any questions, they can ask me. All right. Now next, in India, what are the kinds of direct taxes? In India, earlier we had direct taxes as income tax and wealth tax. But a few years ago, wealth tax was abolished and we do not have wealth tax anymore. Now, what was the difference between income tax and wealth tax? Income tax is the tax you paid on the income you earned. All right. So if I charged you 10,000 rupees as fees, that 10,000 rupees was my income, and on that income, I paid income tax. Clear? Now, what is wealth tax? Now, with that 10,000 rupees, what I earned as income after paying my taxes, income taxes, what did I do with that money? Did I buy a land? Did I buy a building? Did I buy a car? Did I go and hold FDs? Did I make investments? Whatever I have done with that income will form part of my wealth, which I had to declare and pay wealth tax on that. So like I said a few years ago, wealth tax has been abolished and today we do not have wealth tax and we just have one direct tax in India, which is income tax. Now what about indirect taxes? What are the kinds of indirect taxes in India? In India, indirect taxes earlier to 1st July 2017, we had service tax, VAT, CST, central excise, and similar indirect taxes. But after GST came into the picture, a lot of taxes were consumed by GST. So now the major indirect tax we have is GST. In addition to GST, we have import duty, export duty. We have certain other taxes levied by the respective governments. So those are indirect taxes. Okay, but direct taxes, we just have income tax now in India, which we are going to discuss today about. Are we clear about this? All right. Okay. Now let's start off with residential scope and residential status and total scope of income. Please remember, this is a very important topic in Income Tax Act 1961, because every year a person needs to determine the residential status of the assessee. An assessee is a person who is liable to pay taxes under the act. Okay, any amount that a person is liable to pay under the Income Tax Act 1961 is called an assessee. All right, now how does a person become an assessee? Normally, the first step towards becoming an assessee is filing your returns. Once you file your income tax returns, you are declaring certain income you have. Then the government scrutinizes it or assesses your income and then comes back and tells you whether it's okay or whether you have to pay something more. This is a normal case. But there might be cases in which people do not file their returns and they are trying to evade taxes and try to avoid taxes. In such cases, the government finds out that, okay, this person has been earning income more than the basic limit. So let me just catch hold of him and see where is this money coming from and why is he not paying taxes. So then the income tax department starts proceedings against you to find out what are your sources of income, why are you not paying taxes. And then if you are found liable to pay some taxes, then you are liable as an assessee. Okay, so that's what you mean by assessee. So like I said, the residential status of an assessee is very important and has to be determined every year in order to find out under what category does he fall. That is a resident and ordinary resident, resident but not ordinary resident, and non-resident, in order to tax his income in India and pay the taxes accordingly. All right, so there are two concepts here. One is your residential status, and then based on your residential status, the scope of your total income. Please remember, based on what you are, whether you are a resident, an ordinary resident, resident but not ordinary resident, or a non-resident, the taxation of your income in India will depend. Just to give you a broad brief just now, that for a resident and ordinary resident, your global income is taxed in India. Whether you are living in India, Bangalore, Mumbai, Delhi, Chennai, anywhere, but if you have assets in Singapore, America, or England, or whatever, and you're earning income from there, all those incomes will be taxed in India for a resident and ordinary resident. Whereas for a non-resident Indian, the only income that will be taxed in India is if whatever income he earns or receives in India or gets through any sources from India. Whereas if he earns any income in the America, in US, in Singapore, that income is not taxed. This is a very broad explanation that I'm giving you. We will discuss in detail as to how do we treat each of them. Okay? All right. And in case if you have any questions, please let me know. I will be happy to answer. Okay, the incident of tax on any assessee depends on his residential status. Under the Act, for the purpose of income tax, taxpayers are classified into three broad categories on the basis of the residential status. One is your resident and ordinary resident, resident but not ordinary resident, and non-resident. Now, quickly looking at it. Now, these are the different kind of assessees that we will talk about. Normally, these are the assessees you will find. The assessees are individual, HUF, firm, AOP means association of persons, local authority, that means your municipal authorities or other local authorities, your company, etc. The first one, for individual and HUF stands for Hindu Undivided Family. That is also a form of an assessee. Okay, and it comes under the definition of persons under the Income Tax Act 1961. All right, so an individual or a HUF can either be a resident and an ordinary resident, resident but not an ordinary resident, or a non-resident. So these are the three classifications that are permitted for an individual or HUF, that is a resident and ordinary resident, resident but not ordinary resident, and non-resident. Whereas a firm, association of persons, local authority, company, etc. can be classified only into resident and non-resident. So if you see the difference, you will see that in the case of firm, AOP, local authority and company, you don't have resident and ordinary resident, resident but not ordinary resident. You just have two categories, that is your resident and non-resident. Now, how do we determine whether an individual is a resident, an ordinary resident, resident but not ordinary resident and non-resident, or a firm, AOP, local authority, company, etc. is a resident or non-resident? We will discuss in the following slides as to how do we determine that for them. Okay, so just stay tuned and pay attention. The residential status of an assessee must be ascertained with reference to each previous year. A person who is resident and ordinarily resident in 1 year may become a non-resident or resident but not ordinary resident in another year, or vice versa. Now, the residential status of an assessee must be ascertained to each previous year. Okay, for a quick recap on what do you mean by previous year? Previous year is the year in which the income is earned. Okay, so like for example, if the previous year, 1st April 2019 to 31st March 2020, whatever income is earned during that period will be assessed or offered for assessment in the next year. That will be 1st April 2020 to 31st March 2021. So that year is called the assessment year, whereas 1st April 2019 to 31st March 2020 is called the previous year, in which the income is earned. Okay, so just a quick recap. Now, why is it important that every previous year you need to determine the residential status? Please note, it is very important for you to determine the residential status every previous year, because a person who is normally a resident in 1 year, due to his traveling or due to his not being in the country for a particular period of time, he might become a non-resident in the next year. So it is in the assessee's own interest that he determines his residential status every year, because if he determines it as a resident and ordinary resident, his global income will be taxed in India. So the government is okay with it. But in your own interest, you need to, if you have not been in the country or if you are a non-resident and your global income should not be taxed in India, it becomes your prerogative to declare your residential status correctly. All right. I request you to please take about 30 seconds and go through this slide, and then we continue. Okay, now let's come up with the first part as to how do we determine the residential status of individuals. Remember, we spoke about this slide, that individual can be either a resident, an ordinary resident, resident but not ordinary resident, and a non-resident. So now let's look at, in the case of individuals, how do we determine whether he's a resident and ordinary resident, resident but not ordinary resident, or a non-resident. So let's look at the first one. Under section 6 subsection 1 of the Income Tax Act 1961, an individual is said to be a resident in India in any previous year if he satisfies any one of the following conditions. So please remember, now whatever conditions we're going to discuss, if the person satisfies at least one condition out of two of these, he will be termed as a resident Indian. Alright. First condition, he has been in India during a previous year for a total of 182 days or more. Or he has been in India during the 4 years immediately preceding the previous year for a total period of 365 days or more, and has been in India for at least 60 days in the previous year. Okay, now let's take, for example, we are determining his residential status, a person's residential status for the previous year starting 1st April 2019 and ending on 31st March 2020. Alright, so in short, we also call it FY 1920. I repeat, 1st April 2019 to 31st March 2020 is the previous year we are talking about, and it is also called FY 1920. So I might call it FY 1920 in when I refer to it quickly. All right. So first condition, let's say Mr. A. Now we need to find out whether Mr. A stayed in India for 182 days or more in FY 1918, FY 1920. Now, how do we find out? We just need to simply find out as to how many days he spent in India. If he's traveled outside India, we need to exclude those days. Normally, how many years in a day? We have 365, all 366 days in a year. So based on what year it is, whether it's a leap year or not, we calculate 365 or 366. From that, we eliminate whatever days he's not been in India. Let's say out of 365 days, he's not been in India for 100 days. So how many days has he been in India? 265 days. So does he fulfill the first condition? Is he in India for a total of 182 days or more in the previous year 1920? Yes. So he becomes a resident. Now let's take another case. In case out of 365 days in the year he was traveling, he went abroad for a vacation and for some other work and this thing, and he was out of India for a period of 200 days. That's close to 7 months. So in that case, how many days was he in India in the previous year 1920? That means in the previous year 1920, he was in India only for a period of 165 days. So is 165 days more than 182 days, or is it less than 182 days? So it is less than 182 days. Hence, according to the first condition of section 6.1, he is not a resident Indian. Alright, are we clear? Now let's say he is not fulfilling the first condition. So let's look at the second condition, whether he fulfills the second condition or not. He has been in India during the 4 years immediately preceding the previous year for a total period of 365 days or more, and has been in India for at least 60 days in the previous year. So the second condition means for the previous year 1920, he's been in India for only 60 days. Agreed? No problem. In addition to that, in the 4 years before the previous year 1920, that means 1st April 2018 to 31st March 2019, 1st April 2017 to 31st March 2018, 1st April 2016 to 31st March 2017, and 1st April 2015 to 31st March 2016. 4 years immediately before the previous year, 1st April 2019 to 31st March 2020, he was in India for 365 days or more. So in the second condition, there are two conditions. Firstly, in the previous year, he should be in India for 60 days. In addition to this, in the 4 years immediately preceding the previous year, he should be in India for a period of 365 days or more. Now, in case he fulfills any of these conditions, that is, if he is in India for 182 days or more in the previous year, or if he is in India for 60 days or more in the previous year, and 365 days or more in the 4 preceding previous years, he will be termed as a resident Indian. Now, what happens if a person does not fulfill any of these conditions? If a person does not fulfill any of these two conditions, in that case, he will be termed as a non-resident. So in order to be a resident Indian, he has to fulfill at least one condition of these two. That means he has to be in India for a period of 182 days or more, or he has to be in India for at least 60 days in the previous year and 365 days or more in the total of the 4 years of the preceding year. Alright, so if one of the conditions is fulfilled, he will be a resident. If both the conditions are not fulfilled, he will be a non-resident. Please take about a minute and go through the slide. And then we will continue. Okay, now a few notes as to when you're determining the period of 182 days and 60 days, you need to keep these things in mind. The term stay in India includes stay in territorial waters of India, that is 12 nautical miles into the sea from the Indian coastline. Even the stay in a ship or a boat moored in the territorial waters of India would be sufficient to make the individual resident on India. Now, if you see the definitions under Income Tax Act, there is also a definition on the territorial waters of India. Now, why do you think that is important? It is important for this reason because the territorial waters of India extend to 12 nautical miles into the sea from the Indian coastline. So, if a person is on a ship or on a boat in the territorial waters of India, he will still be considered to be in India for the period of determining his 182 days or 60 days or 365 days as applicable. I repeat, so even if he is in the territorial waters of India, then that is considered as a stay in India and will be included in the period of 182 days or 60 days or 365 days as the case may be for to determine his residential status. Okay. It is not necessary that the period of stay must be continuous or active, nor is it essential that the stay should be at the usual place of residence, business or employment or individual. Please remember the period of 182 days or 60 days need not be a continuous period. He can come for 1 month, then go out for another 15 days. He can come for 15 days, go out for 1 month. Okay, and this coming and going out of India and inside India, the total of that should be 182 days or 60 days and 365 days as applicable. Then the condition does not mean that he has to be in India for a continuous period. He could have not been in India for the first 6 months, but in the last 6 months, if he is in India, then that period of his stay in India will be taken into account. For the purpose of counting the number of days stayed in India, both the date of departure as well as the date of arrival are considered to be India. A lot of times there was a confusion as to whether the date of takeoff from India going to another country or the date of landing into India from another country should be taken into account for counting the 182 days or 60 days as 365 days. Yes, it should be. Normally what happens if we have an early morning flight, if we have a 2 a.m. flight, so if the 2 a.m. flight lands at say 7 a.m. or if a flight lands at 2 a.m. in India, the date on which you land in India, that day will be taken as a stay in India. And the day you take off, even if your flight is at 11:55 p.m. on 1st August 2020, even though it is just 5 minutes before the end of the day, if you've taken off on at 11:55 on 1st August 2020, then the date of 1st August 2020 will be taken in for the period of calculating your stay in India. So your date of departure as well as your date of arrival are to be considered as stay in India. Are you clear? All right. Any questions? Please ask me. Okay. The residence of an individual for income tax purpose has nothing to do with citizenship, place of birth or domicile. An individual can therefore be a resident in more countries, and even though he may have only one domicile. So please remember, do not get confused with the terms of resident status of an Indian with citizenship, because it has nothing to do with that. A person that who is a citizen of another country can be a resident Indian if he fulfills any one of the first basic conditions mentioned under section 6 subsection 1. So if one of those conditions is fulfilled, any person, irrespective of what citizen he is, what domicile, what birthplace, whatever, he will be a resident Indian. You do not need to worry about where does he belong to, what is his domicile, or his citizenship. Residential status for the purpose of Income Tax Act 1961 has nothing to do with citizenship. So don't get confused with that. All right. Take about 30 seconds, go through the slide, and then we proceed. Okay, now these are the exceptional cases for whom the second condition of this, that is, he has been in India during the immediately previously preceding years for a total of 365 days and has been in India for at least 60 days in the previous year will not hold good. Now, the following category of individuals will be treated as resident in India only if the period of their stay during the relevant previous year amounts to 182 days. In other words, even if such persons were in India for 60 days or more, but less than 182 days in the relevant previous year, they will not be treated as resident due to the reason that their stay in India was for 365 days or more during the immediately preceding 4 years. So then for these people, the condition of only 182 days or more has to be met. The condition for 60 days and 365 days is not applicable. Now, who are those people? Indian citizen who leaves India during the relevant previous year. We will for discussion purposes we will use the previous year 1920, or I will say previous year 1920. That means it starts on 1st April 2019 and ends on 31st March 2020. So Indian citizens who leave India during the relevant previous year as a member of the crew of an Indian ship or for purposes of employment outside India. Now, if a person is leaving as a crew of an Indian ship, if he is a crew member of the Indian ship and during a relevant previous year, that means in the previous year 1920, he is leaving India and going to any other country. In that case, for that previous year, only if he has spent 182 days or more in India in 1920, he will be considered as a resident. Otherwise, no. Even though he might have been in India for 60 days in the relevant previous year and 365 days or more in the preceding 4 years, he will not be considered as a resident. Similarly, if a person has got a job abroad, let's say a person gets a job abroad on 5th May 2019, he got a job in Australia, and a person had to leave India and go to Australia on 6th May. In that case, he will be a non-resident, or let's not take 6th May, let's for argument's sake take 6th June. Okay, so even though he has spent 60 days in that relevant previous year 1920 and 365 days or more in the previous 4 years, he will not be considered as a resident Indian, simply because he is an exceptional case, and only if he spent 182 days or more during the previous year 1920 will he be considered as a resident Indian, and similar for a member of a crew of an Indian ship. This is the first exception. The second exception, Indian citizen or person of Indian origin engaged outside in an employment or a business or profession or in any other vocation who comes to visit India during the relevant previous year. Now, either it is an Indian citizen or a person of Indian origin. Indian origin means whose parents were Indian, engaged outside India. So a person has been settled abroad and who's been working abroad for many years. Okay, or he holds a job abroad. Let's say the previous person went to Australia and he was there for 10 years or 15 years, and after 15 years he comes back to India during a relevant previous year. In that case, he should have fulfilled the first condition of 182 days or more, and only then will he be considered as a resident Indian, and the second condition of 60 days and 365 days will not be applicable to him. Am I clear? Please take about 30 seconds, go through the slide, and then we will proceed. Okay, now we discussed as to what are the conditions for a person to be treated as a resident and a non-resident. Now let's go a little further. In case of an individual, how can a person be determined whether he is a resident, an ordinary resident, or a resident but not an ordinary resident? So let's look at those conditions. Only individuals in HUF can be resident but not ordinary resident in India. All other classes of assessees can be either resident or non-resident. Like we spoke in the first couple of slides, only an individual in HUF can be a resident and ordinary resident, resident but not ordinary resident, and a non-resident. Whereas your other things, your firm, AOP, company can be either be a resident or a non-resident. They cannot be a resident and ordinary resident, resident or not ordinary resident. All right. So then, a not ordinary resident is a person who satisfies any one of the conditions specified under section 6, subsection 6. So now we have two conditions here, and if a person fulfills any one of the conditions, then he will be considered as a resident but not ordinary resident. Now, what are those conditions? If such individual has been resident in India in any 9 out of the 10 previous years preceding the relevant previous year. So, for discussion purpose, like we said, the previous year we are talking about is previous year 1920, starting from 1st April 2019 and ending on 31st March 2020. So, if an individual has been a non-resident in India in 9 out of the 10 previous years preceding the relevant previous year, that means 10 years immediately before the previous year 1920. Okay, so you will have to list down all the 10 years before 1920 previous years, and this person should be a non-resident in any 9 out of the 10 previous years. How will he be a non-resident? In case he has been in India for 182 days or less, 181 days or less during the relevant previous year, or if he has been in India for 60 days or less during the relevant previous year and less than 365 days during the previous 4 years preceding the previous year. So if a person does not fulfill any one of the conditions, that is this condition, then he is termed as a non-resident, correct? So in order to be termed as a resident but not ordinary resident, the first condition is he should be a non-resident in 9 out of the 10 preceding years preceding the relevant previous year. So before my previous year 2019-20, 10 years before that, out of those 10 years, in any 9 years, he should be a non-resident, first condition. Okay, let's say he is not fulfilling the first condition. Let's come to the second condition. The second condition is, if the individual has during the 7 previous years preceding the relevant previous year, if such individual has during the 7 previous years preceding the relevant previous year been in India for a period of 729 days or less. Okay, now your previous year is 1920. Now 7 years before the previous year, 7 years before the previous year, if he is 7 years before the relevant previous year, that is 1920, if his total stay in India has been for a period of 729 days or less, then also he will be termed as a resident but not ordinary resident. Okay? Alright. So I request you to take 30 seconds, go through this slide and then ask me if you have any questions. Okay, so first condition is if he has been a non-resident in India in 9 out of the 10 previous years preceding the relevant previous year. If he is fulfilling that condition, then he becomes a resident but not ordinary resident. Or the next condition is if he has been in India for 729 days or less during the 7 years preceding the relevant previous year. So if he fulfills any of these two conditions, he becomes a resident but not ordinary resident. Now what happens if in case he does not fulfill any of those two conditions? In that case, if a person does not fulfill any of those two conditions, he becomes a resident and an ordinary resident. So in order to be a resident but not ordinary resident, one of these conditions have to be fulfilled, and if none of these conditions are fulfilled, he will be a resident and ordinary resident. Am I clear? Okay. Now, let's look at some notes for this. In simpler terms, an individual is said to be a resident and ordinary resident if he satisfies both the conditions. He is a resident in at least 2 out of the 10 last 10 years preceding the relevant previous year. That means if your previous year is 1920, 10 years before that, if a person is a resident Indian in at least 2 out of those 10 years, then he becomes a resident, and his total stay in India in the last 7 years preceding the relevant previous year is 730 days or more. So if you see the difference, in case a person is a non-resident in India in the last 9 out of 10 preceding previous years, or if he is in India for 729 days or less in the last 7 years preceding the previous year, he is a resident and not ordinary resident. Now, the contrary to that, if he is a resident in at least 2 out of the 10 preceding previous years, and if he is in India for 730 days and more in the 7 years immediately preceding the relevant previous year, he will be termed as a resident and ordinary resident. So he has to fulfill both these conditions or any one of those conditions in the previous slide 6 subsection 6 to be a resident but not ordinary resident. All right. So if the individual satisfied both the conditions mentioned above, he is a resident and ordinary resident. But if only one or none of the conditions are satisfied, the individual is a resident but not ordinary resident. All right. Am I clear? Please take about 30 seconds, one minute, go through the slide, and then we will proceed. Okay, now let's take an example for understanding purposes. An Australian cricketer visits India for 100 days in every financial year. This has been his practice for the past 10 financial years. Find out the residential status for the assessment year 2020-21. So first and foremost, if the assessment year is 2020-21, what is the previous year? The previous year is 1920. So for the previous year 1920, the assessment year is 2021. Are we clear? Now what is the question asking us? The question is asking us to determine his residential status for assessment year 2020-21. So let's start off. So the question says an Australian cricket player visits India for 100 days every financial year. So let's compute. So for the previous year 1920, how many days is he in India? For the previous year 1920, he is in India for 100 days. Clear? Now, what about the 4 years immediately preceding the relevant previous year? So 100 days per year will make it 100 into 4, 400 days. So does he fulfill the second basic condition in order to be a resident Indian? Obviously, he is not fulfilling the first condition. The first condition was a person should be in India for a period of 182 days or more. So in this case, he is clearly not for 182 days or more. So we'll come to the second basic condition. The second basic condition says a person should be in India for 60 days or more during the previous year. Is he in India for 60 days or more during the previous year? Yes. In the previous year 1920, he is in India for 60 days. Now, what about the 4 years immediately preceding the previous year? What does the condition say? The condition says he should be in India for 365 days or more during the 4 years preceding the previous year. Now, is he in India for more than 365 days during the 4 years preceding the previous years? Yes. The question says he's in India for 100 days every financial year. So 100 into 4, 400 days. So he fulfills the second basic condition and so he becomes a resident Indian. Now we need to check whether he's a resident and ordinary resident and resident but not ordinary resident. Alright. So now how do we check that? What is the first condition? For a person to be a resident and ordinary resident, he should be a resident in India for at least 2 out of the 10 preceding previous years. First condition. So let's take the 10 years immediately preceding the previous year 1920. So 10 years before that is 10 into 10. He's been in India for 1000 days. Now each year, if he's fulfilling the second condition, that is 60 days or more and 400 days or more, 365 days or more in the preceding 4 previous years. So he is fulfilling the second basic condition as well, correct? He is fulfilling the second basic condition. Now let's come. So he's a resident Indian for at least 2 out of 10 relevant previous years, preceding previous years. Now let's come to the second additional condition, that is his total stay in India in the last 7 years preceding the relevant previous year is 730 days or more. Now the previous year is 1920. So let's take 7 years before the previous year 1920. Now is he staying in India for 730 days or more in the last 7 years? No, right? Because the question says he's staying in India for 100 days every financial year. So that will make it 100 into 7, 700 days. So he does not fulfill the second condition here. The second additional condition, that is his stay in India in the last 7 years preceding the relevant previous year is not 730 days or more. So he does not fulfill both these conditions. So as per this, he will be a resident but not ordinary resident. Are we clear? Let's look at the solution. A has been in India for a period of 60 days during the previous year 1920 and for a period of more than 365 days during the 4 immediately preceding previous years. Therefore, since he satisfies one of the basic condition under section 6 subsection 1, he is a resident for the assessment year 2021. Clear? We discussed this. For 1920, he was in India for 100 days, and the 4 years immediately preceding that, he was in India for 400 days. So he fulfills the second basic condition. Since his period of stay in India during the past 7 previous years is less than 730 days, he is not ordinarily resident during the assessment year to 2021. Like I told you, in the previous year 1920, he is there for 100 days, but the 7 years before that, he is in India for 700 days, whereas he should have been in India for 730 days or more. So he becomes a resident but not ordinary resident. Okay, therefore A is a resident but not ordinary resident during the previous year 1920, relevant to the assessment year 2021. Please take about 30 seconds, go through the slide, and then we proceed. Any questions, please ask me. Okay, now let's take another example for discussion purpose. Mr. A US citizen, comes to India for the first time during the previous year 2015-16. Alright, so previous year 15-16 means 1st April 2015 to 31st March 2016. During the financial years 15-16, 16-17, 17-18, 18-19 and 19-20 respectively, he was in India for 55 days, 60 days, 90 days, 150 days and 70 days. Determine the residential status for the assessment year 2020-21. So let's read the question again. Mr. A US citizen, comes to India for the first time during the previous year 15-16. Alright. So from then on, during the financial years 15-16, 16-17, 17-18, 18-19 and 19-20, he stays in India for 55 days, 60 days, 90 days, 150 days and 70 days respectively. So now the question is, determine his residential status for the period for the assessment year 2021. So assessment year 2021 is previous year 1920, 1st April 2019 to 31st March 2020. So let's start off. Let's look at the first basic condition. During 1920 previous year, was he in India for 182 days or more? No, he was for 70 days. So the first basic condition is not fulfilled. Okay, he does not fulfill the first basic condition. First basic condition. Okay, so next come to the second one. Is he in India for 60 days or more during the relevant previous year? Yes, he is in India for a period of 60 days in 1920. That means 70 days. Now come to the second part of the question. Is he in India for 365 days or more in the 4 immediately preceding years? That is 150 days plus 90 days plus 60 days. That is 300 days plus 55 days. So it's only 355 days. It is not 365 days. So he is not fulfilling any of the 2 basic conditions and hence he becomes a non-resident. Alright, now let's repeat again. The first condition is he should be in India for a period of 182 days or more in the relevant previous year. But in this case, for the previous year 1920, he was in India for only 70 days. The first basic condition not fulfilled. Second basic condition, he should be in India for 60 days or more in the relevant previous year. Is he in India for 60 days or more during the relevant previous year? Yes, he is in India for 70 days. Agreed. Now come to the second part of the second basic condition. Also, he should be in India for a period of 365 days or more during the relevant 4 preceding previous years. So the 4 preceding previous years are 15-16, 16-17, 17-18 and 18-19. And during those 4 years, he was in India for 55, 60, 90 and 150 days respectively. That totals up to 355 days, which is less than 365 days. Hence, he does not fulfill even one basic condition. So, he is a non-resident for the previous year, 1920. Okay. I request you to please take about a minute, go through the slide and ask me any questions you have. Okay, now let's talk about residential status of a HUF. We spoke about individual, right? Now let's talk about how do we determine the residential status of a HUF. Even for HUF, we discussed that a HUF can either be a resident and ordinary resident, resident but not ordinary resident, or a non-resident. A resident. A HUF would be a resident in India if the control and management of its affairs is wholly or partly situated in India. A HUF would be a non-resident if the control and management of the affairs is situated wholly outside India. It would be a non-resident. So the control and affairs of the status of a HUF depends mainly about the situation of the affairs of the HUF. If it is wholly or even partly situated in India, it will be a resident Indian. If it is wholly situated outside India, it will be a non-resident Indian. We will discuss about this a little further. Alright, now meaning of the term control and management. The expression control and management referred to under section 6 refers to the central control and management and not to carrying on of day-to-day operation by servants, employees or agents. The business may be done from outside India and yet its control and management may be wholly within India. Therefore, control and management of a business is said to be situated at a place where the head and the brain of the adventure is situated. Now please remember, for a HUF, what we need to focus on is where is the brain or the head of the HUF. Where is he located? If he is located in India, then it is a resident Indian. If it is located abroad and he is controlling it from there, he is giving orders from there or controlling the entire business from there, then it is supposed to be a non-resident. Now who is the control and management of the business? Normally it is the Karta, a person called a Karta of the HUF, who is supposed to be the head and the control and management of the business. It is of a HUF. The place of control may be different from the usual place of running a business and sometimes even the registered office of the assessee. This is because the control and management of a business need not necessarily be done from the place of business or from the registered office of the thing. So now what this simply says is, what this simply means is that it's not necessary, even though the registered office of the HUF might be here in India, it might be in Mumbai, Delhi, Bangalore, anywhere, but if the main control and the brain of the HUF is situated abroad or out of India, then it is termed as a non-resident. He should also, the control or the brain of the HUF should also be in India. But control and management do imply the functioning of the controlling and directing power at a particular place with some degree of permanence. So please remember, when I say control and management, it has to be some sort of directing power, some sort of indication that yes, that person is the one controlling the company. The management of the company is from abroad. It could be a person or it could be another entity controlling this HUF. In that case, if the control and management is from place outside India, in that case, it will be a non-resident. In other case, it will be a resident. All right, please take 30 seconds, go through the slide, and we will proceed. Please ask me any questions you have. Okay, now we come to resident and not ordinary resident, and resident but not ordinary resident. Resident and ordinary resident but not ordinary resident. If Karta of the resident HUF satisfies both the following additional conditions as applicable in case of an individual, then the resident HUF will be resident and ordinary resident. Otherwise, it will be resident but not ordinary resident. So, a Karta is the head of the HUF. So, if the head of the HUF fulfills the two basic conditions, the two additional conditions, in that case, the HUF will be termed as resident and ordinary resident. Otherwise, it will be a resident but not ordinary resident. Now, what are those two additional conditions? The Karta of the resident HUF should be resident in India in at least 2 previous years out of the 10 previous years immediately preceding the relevant previous year. And the stay of the Karta during 7 previous years immediately preceding relevant previous year should be 730 days or more. So the Karta is the head of the HUF. Please remember there can be just one Karta. So if the Karta is a resident in India in at least 2 years out of the 10 preceding previous years, and his stay in India during the 7 years preceding the relevant previous year is 730 days or more, in that case the HUF will be termed as resident and ordinary resident. Otherwise, it will be a resident but not ordinary resident. So please remember, only the basic condition for a HUF has differed. How is it differed? The basic condition is if the term control and management of a HUF is wholly or partly in India, then it is a resident. If it is wholly outside India, it is a non-resident. So first thing we determined it is a resident. So how do we determine whether the HUF is a resident and ordinary resident or resident but not ordinary resident? In this case, if the Karta of the HUF has been a resident in at least 2 out of the 10 preceding previous years, and if the Karta has stayed in India for 730 days or more during the relevant 7 preceding previous years, immediately preceding the relevant previous year, if both these conditions are fulfilled, the HUF will be said to be a resident and ordinary resident. If even one of these conditions are not fulfilled, it will be said to be a resident but not ordinarily resident. Please take 30 seconds, go through this slide, and then we will proceed. Any questions? Please ask me. Okay, let's take an example. The business of a HUF is transacted from England and all the policy decisions are taken there. Mr. B is the Karta of the HUF, was born in Mumbai, visits India during previous year 1920. After 15 years, he comes to India on 1/4/2019 and leaves for Australia on 1/12/2019. Determine the residential status of B and the HUF for assessment year 2021. First and foremost, the business of the HUF is contracted from England. That means the control and management of the HUF is from outside India wholly. So, and the policy decisions are taken there. So, it becomes a non-resident Indian. Alright, the HUF becomes non-resident. Now, let's come to B. Mr. B comes to India for the first time. He comes to India on 1/4/2019 and leaves for Australia on 1/12/2019. So 1/4 to 1/12 is about 8 months. 8 months into 30 on an average is about 240 days. So is he in India for more than 182 days or more during the relevant previous year? Yes, he is in India during the relevant previous year for 182 days or more. Okay, so in this case, Mr. B will be a resident Indian, whereas the HUF is a non-resident. Let's look at the solution. During the previous year 1920, Mr. B has stayed in India for 245 days. That is 30 plus 31 plus 30 plus 31 plus 30 and this thing. Therefore, he is a resident Indian. However, since he has come to India after 15 years, he does not satisfy any of the conditions of being ordinarily resident. Therefore, the residential status of Mr. B for the previous year 1920 is resident but not ordinary resident. Correct? Since the business of the HUF is transacted from Australia and nothing is mentioned regarding its control and management, it is assumed that the control and management is also wholly outside India. Therefore, the HUF is a non-resident for the previous year, 1920. Any questions so far? Anything? In case any questions, please ask me. Take about 30 seconds. And we stop with this slide today. And we will continue in the next session on residential status and the scope of total income. So please take 30 seconds and let me know if you have any questions. Once again, I would like to reiterate the Unacademy platform and the Plus model. I request you to subscribe to the Plus model, where it gives you packages for 1 month, 3 months, 6 months, 12 months, and 24 months. And I personally suggest the 12 months and the 24 months because of cost effectiveness and the span of preparation that you require. And while you make your subscription, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on your subscription. Also, I request you to go onto the Unacademy app and click on the follow button on my profile in case you haven't done so already, to get real-time notifications and updates about my sessions. Thank you so much, and I will see you soon. Good day.